the whole conversation about 1 hour charts is something that I think goes back at least 6 months, probably longer than that, which is as volatility levels for the daily price movement range were being formulated. We've got a whole different thing we're doing for daily price movement ranges as opposed to hourly, down to the data and the way that we're calculating it. I never thought that I would be taking dailies. It wasn't ever the plan to take a daily price movement range and apply it to anything but the daily. And that's been working really, really well through the 6 months of testing that these DPMRs have been under. Stress testing. How do I break this thing? And in many ways, whenever you're trying to find a new strategy indicator approach, try to break it. Be honest with yourself and try to break it. That's what we've been trying to do here. And we haven't, right? So if I look at the daily, this looks great. Surf the DPMR. But then, I think maybe by accident, I threw this on an hourly chart. And then we started testing it, Lorna Bott and I. And all of a sudden, the intraday pattern of bouncing off these zones and then moving up into the resistance zones started happening. I thought, wait a minute, there's more here than just applying this to the daily. So here's a chart of gold, right? And this is exactly where those DPMRs have sunk into a 1 hour chart, creating a setup that I would say on average is something that we could see last for 1 to 3 days. Sometimes only 1 day, sometimes even a little bit less. It's not intended to be a day trade, and sometimes more than 3 days. So first thing, what is the 1 hour not? This is not a day trade. This is not the point. This is not about getting out at the end of the session. This is going to be overnight. So the idea is, how can I take advantage of movement that's a little bit bigger, because this is a 1 hour chart as opposed to a 5-minute, and with the expectation that we could take it overnight. So my preference for this could be, say, micro gold if full size gold is too much, or even GLD or gold calls, right? You can play GC calls, you can play GLD calls. There's a lot of ways to choose your own adventure through this 1 hour setup, knowing that you want to be able to take this thing overnight. All right, so that's the way gold has been working. What about, got a question about the S&P, right? I have not looked at the S&P. I did look at gold because gold's moving in an uptrend, right? The S&P is not in an uptrend. Could it work? Yeah, absolutely. It sure could. But why is gold so much more interesting? Because if I'm not getting a pullback on the daily and I want to find a way to engage the trend in a shorter window of, say, 1 to 3 days, that 1 hour has been really, really good. So the first question was, okay, daily time frames taking off. Oh, the 1 hour is giving us smaller windows of opportunity. In CHOP, I may not be as interested, but what about pre-earnings? This is another thing that I was looking at. Let's take a look at Microsoft. What was Microsoft doing before the earnings that are coming out here in about 40 minutes, right? What was Microsoft doing in the last few days? I'm not usually going to want to put on a longer term trade in front of earnings, but let's say I want to be nimble. Same thing. I can look for opportunities. I can look for opportunities where Microsoft sinks into a zone, right? I don't love this window, but it is something that I'm getting very curious about. So let's then, rather than Microsoft here, which is just looming on the horizon, what about Apple? What about Apple? So let's pull up the daily chart of Apple first. Is Apple in an uptrend? No, I would have rather it been in a trend. Absolutely. And then if here's earnings. So I'm not going to play the daily time frame with earnings on the 2nd of February. It's inside that 2-week window that I try to avoid because why? The scales tip in favor of traders who write premium inside of 2 weeks as opposed to traders who buy premium. I'm a buyer of premium. I like to be long calls, long puts in a cash account. No pattern day trading rule. It's a beautiful thing. All right. Then what about something like Apple? Do I want to surf the wave? I sure could. Do I want to buy tests of the green DPMR? Absolutely. So the 1 hour chart is going to give us some latitude, and this one's coming into earnings. So I'm only looking at Apple from the standpoint of, okay, I can't trade it on the daily, and it's going into earnings. If there are opportunities, maybe the 1 hour is going to be interesting, right? What about something like crude? Right? Now, first of all, do I have a trend in crude? I actually do not, right? So maybe you say, Rod, what about something with a trend? Find, we talked about gold already. We know bonds are trying to turn into a trend. Yeah. Those would be preferable. And then after I exhaust all the trending dailies, I can look at non-trending dailies and look at if there are any opportunities in crude. Not right now, not really. And what a cool way to know that I don't have to stare at this hour to hour. I can just look at these zones and say, okay, every hour I'm going to have a new zone. And if we get to that zone, terrific. If we don't, nothing to do. Really important. Let's go ahead and take a look at the bonds. Same thing, gang. Same thing. So this is going to slow down the process, meaning I'm not looking at 5-minute charts with the hope of trading for a couple of hours. We're looking at a 1 hour chart, looking at being in the market for a few days. This frees us up to not need longer term follow through, which has been a little difficult, right? Sorry, did I say hour? Yes, sorry. They're going to be coming in every day. Every day. These are DPMRs. These are going to every day. Sorry, I said hours, didn't I? Okay, DPMR. Every day. Every day I'm going to have a new zone. But I can check the 1 hour every hour for an update to see if it reached the DPMR. So I'm trading a 1 hour chart with daily volatility zones on them. So there's a lot of possibility in that regard, both in futures and in equities. And so that's something we're going to continue to do because it's going to allow us to not have to rely on daily time frames to give us follow through. Although some absolutely are, right? Freeport-McMoran, one of our favorite proxies for copper, bounced off the wave, moving higher. And that's something we would like to focus on, bouncing off the wave. Now take a look at what's excellent. This was our Freeport-McMoran trade in here. Using the wave and the DPMRs, right? If we can do something and something else. So maybe I've got the wave and I've got the DPMRs. That's exactly what we had here. All right. All right, gang. So that's just something we can continue to look at. Are these infallible? Of course not, right? Of course not. But if we're focused on trends, if we're focused on support and resistance, and then we're focused on using tools to confirm where a market could go, we're in really good shape. And that's where, I'll look at things like crude and I'll look at things like gold and bonds and even some of these equities, some of these stock names, and we'll see what kind of opportunities are presented. All right. So let's be patient. Let's remember that we're still in a very tricky environment in the broader averages as we're going into the FOMC meeting. It seems that we do have more clarity than not about where the terminal rate is, anywhere from 4 3/4 to 5% to 5 and 5 1/4. And it looks like November and December are still up for grabs for a potential cut. Hard to be bearish there, gang. Hard to be really bearish. And if you're thinking, what about recession, Rog? The R word. Look, we're going to no sooner be up to 5 to 5 1/4%. It's going to take 6 months to confirm a recession in terms of the data of sequential GDP to GDP of negative, right? At that point, the Federal Reserve is going to be done hiking and they can start talking about cutting. Talk about having a way to combat the recession narrative. Hey, we'll lower rates. That's why I'm not really worried about a recession. I think the Federal Reserve at this point is rearmed, and that's something we want to keep an eye on. All right. So that is my breakdown, and that's how I'm going to be using 1 hour charts, starting in February.